So Andy and Sean, what are the benefits of completing a tax return early?
Okay, so I'll start if
You
that's
go
all right,
first.
Sean.
Yeah, that's fine.
I suppose first of all, filing a tax return late, i.e. after the 31st of January, incurs a penalty. If you also pay the tax late, then there'll be interest and potentially penalties to pay as well. So I suppose the stick is completing your tax return early means you avoid interest and penalties. But there are other reasons why you should do your tax return ideally much earlier than the 31st of January each year. I suppose the main one is that it gives you plenty of warning about what your tax liability is. You know, you don't really want to be finding out a week before the 31st of January that you've got a sizable tax liability. And likewise, you also don't want to be finding out in January that you're due a big refund. You know, if you are due a refund because perhaps your profits have dropped or your payments on account the previous year were too high, the sooner you get the tax return submitted, the sooner you'll receive the refund. And, you know, with many businesses struggling currently, that tax refund could give them a real boost, and it could, you know, it could see a business through to the end of lockdown or potentially the business reopening in the spring or the summer. So lots of benefits to getting your tax return done early.
Yeah. What do you think, Sean?
Yeah, well, what I will add to that is, yeah, on top of the excellent points Andy's made, this year more than any year is probably the biggest challenge to a lot of people, because a lot of the grants that have been received are taxable and they all fall within the tax year. So people to understand what the liability is based on the grants they received, it's really key that they understand what that liability is and when it's due, because there've been a lot of grants thrown out, but what seems to have lost or slipped some people's minds that these are taxable. So they really need to be accounted for. And the second thing I would point out is, with the personal tax system, there's always the payments on account element as well. So that is also key to understand what your liability is, so you can assess whether you can make changes to previous amounts that have been deferred, or that HMRC you think are due. So the payment on account system is probably the one thing when you're a new self-assessment taxpayer that seems to really complicate matters. And the more you're aware of what you can do or what liabilities you've got coming, again, it just needs to be really scheduled early before it's too late, before you have to speak to HMRC if you need to. It's always best to get them early rather than as Andy said, in January.
Yeah, and with the second payment on account being due 31st of July, that's a really good target for anybody who's looking to get the tax returns in early, because if you submit them before the 31st of July and actually you're in a position to reduce your payment on account because profits have fallen, whether that be due to COVID or some other reason, then you can reduce your second payment on account to exactly the right amount, rather than estimating it. Because if you estimate it and you get it wrong, then potentially there's interest to pay on any underpaid payments on account. So I think everyone should be aiming to get the tax returns done before the 31st of July. For next year or this year now, we're going to be looking to get all of our tax returns filed before Christmas. You know, we're going to need everybody to bring their information in by the 30th of November at the latest to enable us to do that. You know, I suppose flipping it to looking at it from our point of view, it's very difficult for us to plan resources if we don't know when the books and records are going to arrive at our offices. So, you know, at many firms of accountants, you perhaps get people dropping books and records off last week in January, and then there's a mad rush to get them all finished. it means it's very difficult to sort of maintain customer service levels if there's a mad scramble at the end of January to get a load of tax returns done. So we're encouraging our clients to bring all of their stuff in 30th of November at the latest, but ideally before the end of July, so that we can plan our resources properly, make sure customer service levels don't dip as we get closer to the 31st of January, but also to give the clients plenty of notice as to what the tax liabilities are in January 2022, so that they can plan accordingly and save up if necessary.
Okay, thank you. And what do you think are the benefits of keeping digital as opposed to paper records?
Well, I mean, I'll take this one to start off with. The massive advantage, I guess, is what we've seen with lockdown is that, heaven forbid, there's another lockdown, getting your information across to us is a lot easier if it's electronic rather than on a paper format. And also having it electronically, especially if you're keeping it up to date, gives you a close idea of how you're doing and where you can do at in terms of potential tax liability or potential income levels, to make really quick calculations of what you think the tax liability could be. It just adds to the speed of everything that we're saying in order to assess what your liability is and how to deal with that. Being on a digital format is always going to speed up that tax return process, and that's key to understanding where you are and what you can do.
Yeah, and also as we move towards making tax digital, we've already got making tax digital for VAT registered businesses. It's getting rolled out to further businesses shortly, and ultimately everybody who fills in a tax return will need to keep their records digitally. So now I think is the perfect time to start thinking about the best way of keeping digital records, because it's not going to be that far in the distance where you're going to have to do them by law. And as Sean said, offices currently being closed, we're having to decontaminate books and records that we receive from people that are still keeping paper records. There's never been a better time to go digital, and there's so many different alternatives with regards to software, etc., that makes it really easy. It also makes our life easier. So ultimately, your tax return invoice is going to be lower if you're digital rather than if you're handing us a carrier bag full of paper records.
The other thing I'll add to this as well is that, for some people, collating all the records, in time for getting the tax return done is always one of the impediments to getting stuff in early. So everyone having to scrabble around or finding a receipt or finding a piece of paper is just freed up by using a digitally approved format, which allows you to collate everything as you go, really, and saves you a lot of headache and a lot of time to get your information in. That's probably the biggest apathy of people is digging out all the stuff in order to get the tax return ready for us to look at, and going to a digital format can remove that impediment.
Okay, thank you both.